Hi, this is Mohan Kumar from Brainy Bulls, and I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, let's look at the Nifty chart for May 17th, 2023, and see what kind of entry and exit signals the strategy would have given us. Let's have a quick look at the charts. You're looking at the two-view chart in the TradingView platform. So we have the Nifty spot on the left and Nifty futures on the right. And both these charts are set to a 3-minute time frame. So before we bring the indicators on, let's look at the price action for May 17th. The price kind of happened, had a flat open, and post the open, as you could see, there was a bit of a consolidation, and that consolidation is very clearly seen on the futures chart. And then the price sharply moved downwards, right? There was a kind of a retracement and then it moved downward. And then from here, the price corrected and retraced back and it closed somewhere at this level. So, by the look of the price action or by the look of these charts, right, everybody's wish, like especially the intraday traders, would be happy if they could have captured this particular move right here, right? Right here, correct? This particular move right here, and of course, this one. So is it really possible to capture all these moves? Okay, that's exactly why the strategy that I'm going to talk about, the triple threat intraday strategy, is so powerful that the three indicators which forms the basis for this strategy, because of which I call this as triple threat, right? These three indicators, which are custom made, right, to be exclusively placed on the Nifty 3-minute time frame. The three indicators are the price levels, the market participation, and the trend meter. I have the same indicators on the other chart as well, but the parameters or settings are slightly different, right? Having said that, each one of these indicators are equally important, right? And as you could see, the market participation are represented by the three dots, the black, blue, and the green, right? And the locations are nothing but the central pivot range, the previous day high, low, close, and I also bring in the resistance and major resistance and support levels from the past price action data. Okay, and the trend meter indicates the strength of the trend, right? We could actually derive whether the trend is going to continue, the trend is going to reverse, and based on consolidation and based on the candlestick patterns, the price action patterns, based on the signals that these indicators give us, we would then execute trades. Now let's look at the same chart now with these indicators applied, right? Now the price opened below the central pivot range, as you could see here, and the price kind of, as you could see, it consolidated around a major location, which is the previous day's low, right? On the futures chart, the price opened right, at the previous day's low. It consolidated. It was kind of below the previous day. The consolidation happened below the previous day's low, as you could see, and there was a beautiful price action right here. Okay, and look at the trend meter. As the price was consolidating, the trend meter was moving towards the 50-way mark, the mid mark, right? We have discussed in many of the videos, right? Uh, a scenario where the price either retraces back or consolidates while the trend meter retraces back to the 50 mark. The price is at a key location, right? And look at the moving averages. They're all sloping downwards. They're wide apart. And this particular pattern has been discussed many a times, and this is a sure short entry for a short position. Okay, so this exactly is where we would get into a trade. Now, this particular candle pattern that we are looking at, right? A bullish candle, then you have a doji, but in this case, the doji is even better, which is an inverted hammer, and then you have a bearish candle, okay, that closes below the bullish candle. So it's a three candle pattern, which is called the evening star. It happens at a major location. In both these cases, the location was like even the moving averages was part of that location, right? The blue moving average right here, and all these three moving averages. The previous day low happens to be the major location, and it's a beautiful setup. Well, the trend meter was at the 50 mark. You easily get into a trade and you stick to the trade as long as the price moves to another major location, right? And the trend meter is into the green zone. As you can see, when the price moved up until here, right, which is another major location, correct? As you can see at this one, which is the daily support. You could see volume candles, and the price, the trend is into the green zone. This exactly is the place where you could have taken your profits. And looking at how the day's price action works, like post consolidation, the price swiftly moved downwards. Now, this clearly indicates that the momentum to the downside is really, really strong. So, we would not get into um, a long trade because the price to steer through all these moving averages which are sloping down is unlikely, and the price also, it's not at a major level, which is the central pivot range or the previous day high or low, right? And so we need to wait for further price action. We could take a follow through trade in the downward direction because of the current day's price action behavior, but certainly not on the upside. So as you can see, the price swiftly moved into the green moving average. This has been discussed many a times. When the price moves back into the moving average, when the price is not at a major level, the more likely scenario is the price to continue in the direction of the current day's trend, which is of course the downward trend, right? So you enter into a trade right here, which is this candle, which is falling right off of the moving average. In this case, on the spot chart as well, you could see it is moving right off of the moving average and close below the daily support. A strong setup considering how the price action for today, since morning, and the trend meter again has moved back into the 50-way mark, almost close to that, right? As you could see, in this case there's a slight bump. It's a beautiful retracement, and this is a follow through trade that you could have taken. So two back-to-back trades, you could have caught the second trade as well, right? You could have stuck to the trade as long as the trend meter moves back into the green zone and the price is at a major location. In this case, now the trend meter got into the green zone, right? Sorry, it is the green zone, not the red zone. So the green zone, and then you could see a lot of participants entering the market, and you could see the price action as well. There is a green, a bullish candle right after this, which has not come out in any of these, series of candles right here, right? So this exactly is the place where you could have taken your profits. Let me clear the drawings out so you could clearly see. So this exactly is the place where you take your profits. Do you get into a long trade? No, because the price is not at any major location as such. Again, it is way past the moving averages. The price will have to get back into the moving averages to show us any signals of further move to the upside, or if it's going to catch up back to the downside. As you could see, the price swiftly moved back into the green, right? And in this case, the daily support was broken. Support number two was broken. We have seen that in many of the videos. Whenever a location is broken, right, it will have to move back into that location. And if the moving average happens to be there, so it's confluence of signals. So this could be another good follow through trade. Look at the trend meter. So it is a kind of a strong indication that the strength to the downside is very, very strong, right? See here. Now this is the high point. This is the next high point. So on the price actually made a lower high, but the trend meter made a higher high. So this is the price trend conflict that we would take advantage on, and this is a nice follow through trade to the downside. So a third trade. So, given the fact that we have taken three trades in the direction of the trend, it's a beautiful setup. All three trades happen to work out beautifully in our favor, right? So, let's look at the price action, further price action post these three trades, right? As you could clearly see, that when the price actually moved back to the same previous low point, right? There is a stiff support, and as you could see, trend meter also is kind of like sloping, or it's moving higher, right? And it is very clear on this particular chart where the price actually made a lower low while the trend meter actually made a higher low. So this again is a price action conflict, and we know for a fact that the trend to the downside has come to a halt, and maybe it could reverse and move further higher. We don't get into a long trade right here. We wait for the price to catch up to the EMAs and see what kind of signals it gives us. So in this case, the price even broke the green moving average, the blue moving average. It closed a little above the blue moving average, as you could see this green candle, and the blue moving average is kind of flat. So this indicates that the price is going to move further higher. So a nice trade. If you are an aggressive trader, you could have entered into a long trade right here. So the reason for me to enter into a long trade is very simple. Let me clear the drawings out so you'll get to know why I was so sure about this long entry. Okay. So as you could see when the price actually got back to this moving average, right? When it retraced back on the futures chart, when it came back to the same previous low point, right? This you could see a beautiful candle, the pin candle with a participation, right? A volume candle with a participation, and we do not get into, and also the trend meter on both these charts. On the spot chart the price did move slightly lower than the previous low point, but the futures chart, it's very clear that there is a lot of participation that's coming into play with a lot of volume with the candle pattern. And look at the trend meter, which is a very good signal on both these charts that the trend meter has actually made a higher low, right, when the price actually made a lower low. So this is a beautiful pattern. We have been discussing about this pattern in most of our videos. And post a huge move to the downside and post this EMA retracement and coming back to the same previous low point acts as a double bottom kind of a setup. It's not the actual double bottom, but in this case, the price conflict based double bottom setup, right? Or the price conflict based patterns where the price makes a lower low, and but the trend meter makes a higher low in case of a downtrending day, right? So we do not get into a long position right here, but we know for a fact we should not enter into any more short positions. For example, if the price retraces back into this moving average and did not enter into a short position, because for a fact that we know that the price, the downward momentum has lost its strength, right? So that is why we have been discussing about this pattern, why there is no short trade here. There was a short trade here, right? There was a beautiful short trade here, but there is no short trade here, and exactly that's what happened. So as a continuation pattern, right? We did not enter the trade right here. We did not enter into a short trade right here, but this is the place where we would have taken advantage of the long side. Okay, so when the price actually moved back into the moving averages, it actually dipped. So this is a nice trend continuation to the upside. So as you could see, the trend meter moved way past. It is the highest point it has made since morning, as you could see, right? And then the price dipped into the 50 mark, right? In both these charts, the price actually, the trend meter dipped into the 50 mark, and we know and as we have been saying that no, the trend is now to the upside. We enter into a trade right here. So we would actually take this particular green candle, you know as our entry point. So the high of this candle and the low of this candle is going to be stop loss. The high of this candle is going to be our entry. Okay, so this exactly is the place where we would have entered. We know for a fact that the target is going to be limited, but like I said, trading is all about taking chances. Trading is all about probability. You've taken three good trades, so you are already into great profits. But as a follow-up trade, if you want to take up a reversal trade, right, based on all these facts that we have discussed so far, now this is one small trade that you could have very well taken, right? This one beautiful trade, so you could have still made some profits out of this. So this is exactly how we take trades based on facts. We do not predict, we do not anticipate or expect, we do not guess, but rather we study the charts, we read the charts, we look at. So it is not just the indicators, right? So lot many people actually debate on this particular topic that trading solely based upon indicators is a gamble, or maybe it's not going to be a scenario, it's not going to be a long term profitable strategy. Hence, I do not rely completely on indicators alone. I have the price action pattern, which is the mother of all strategies, right? Price action based strategies are very, very powerful. So, to make it even more powerful, I have applied the indicators, and these indicators are not available in any charting platform. Let me make it very clear. These are custom made indicators to be placed exclusively on the Nifty chart for a 3 minute time frame, right? And these indicators will give us clear signals, and if you know how to read the charts, if you understand the patterns, there are 5 patterns which I discuss on the webinar, and when these 5 patterns emerge, and I just don't talk about the indicators, I talk about the 5 patterns. I talk about the observations I do in the morning, right? Pre-market, post the market open, right? We get to know the market's behavior in the first 30 to 45 minutes, and then we read the indicators. With all the experience that we have, that I have garnered over years, I have actually formulated this particular strategy to work well in any scenario. It could be a gap up, it could be a gap down, it could be a flat open, right? I know how to read the charts based on the price action, the candlestick pattern, and with the help of these three indicators, I would then execute trades. As you would have seen, every single trade is, the stop loss is limited to a single candle, right? In this case, let me clear these drawings out so that we could quickly look at the stop loss and the profitability factor, right? So in this case, this was the red candle that we actually, based our trade on, right? And in this second trade, a follow through trade on the downside, this was the candle that we took our trade on. And the third trade, again, this was the candle we took our trade on, right? And the fourth trade, this was the candle we took our trade on. Look at how small the losses. The loss on the downside is when the on the bearish candle, the high of the candle is going to be the stop loss, while the entry is going to be the, the, the low of that candle. So look at this. This is the risk, and look at the profit. Multi-fold profit, right? Look at the risk again, and look at the profit. Look at the risk, look at the profit, right? Look at the risk and look at the profit. This happens to be the smallest trade. These two happens to be the smallest trade for the day, but even the smallest trades has given us more than 1:2, or close to 1:3 risk to reward ratio. That's how the strategy is so powerful. And on days like these, we would be able to capture the most profits than anybody else could have caught with the help of this particular strategy. So if you like what you're seeing, please do like this video, and please do subscribe to my channel to get notifications right on any new videos that I post. And if you like, if you want to know more about this particular strategy, right, I have formulated a beautiful course that's called the Triple Threat Intraday Trading Course. It's an end-to-end course targeting beginners and experienced traders, right? I cover all the topics like the price action patterns, the candlestick patterns, and of course the charting platform. The one that we are using is the Trading View. So I'm going to talk a lot about the charting, platform, and how to use these indicators. And these three indicators, the custom indicators that I've built, right? I've coded using Pine script, will be given to you absolutely free with lifetime access along with this course. You also get 90 intraday charts, the 3 minute charts that you just looked at, the two view charts, right, with clear markings of entries and exits. And with this video, the Nifty chart analysis in YouTube, you would now have the utmost confidence to become a professional independent trader and start taking trades every single day, right? So it's going to be a private one-to-one session, right? And but that way I could tailor the content and ensure that you get the best out of this particular course. So if you really want to know more about this particular course, feel free to contact me at my WhatsApp number, or drop a message to my WhatsApp or email ID, right? And I could let you know on the topics that will be covered. I've also made a couple of videos to let you know on the topics, and why this particular course is going to be really unique and you should opt for. So please do go over those videos. But if you would like to directly reach out to me and discuss about this, please feel free to contact me at this WhatsApp number or email ID. Okay. So until I get back to you with another video on Nifty chart analysis, it's bye from me, and take care of you and your loved ones. Bye bye.